Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate finance and try to make sense of it all. And let me tell you why WEYERHAEUSER Company's latest 10Q filing has some juicy details to unpack, especially when we look at their financial tables to see where the real story lies. Before we jump in, make sure you are subscribed so you do not miss out on future deep dives like this one. And if you want to chat about these filings with other finance enthusiasts, join our Discord community linked in the description below. Alright, so this is WEYERHAEUSER Company's quarterly report for the period ending the 30th of September 2025. We are going to skip the boring legal stuff and get straight to the meat of this report, which is the financial performance presented in their statements. Looking at their consolidated statement of operations for the quarter ended September 2025, they reported net sales of $1.7 billion, that is up slightly from $1.6 billion in the same quarter last year. That sounds pretty good, right? A $36 million increase year over year, but hold on before we celebrate too much. Let's see what happened with their costs. Their cost of sales actually jumped up by $82 million. That means while sales went up by $36 million, costs went up by $82 million. This is why their operating income actually went down from $78 million last year to $123 million in September 2025. Wait, that is an increase, not a decrease. My mistake. Operating income went from $78 million to $123 million. That is a $45 million jump. So even though costs rose, sales rose more to offset it. That is a good sign. And what about the bottom line? Their net earnings for the quarter was $80 million. That is a significant leap from just $28 million in the previous year. This means the company is making substantially more profit. Now let us look at the year-to-date figures for September 2025. Net sales were $5.3 billion, a slight decrease from $5.4 billion in 2024. Costs of sales increased by $93 million. This combination led to a decrease in operating income from $544 million to $480 million. On the flip side, their net earnings for the year-to-date period decreased considerably from $315 million in 2024 to $250 million in 2025. That is a $65 million drop in profit for the year so far, which is something to keep an eye on. Let us break this down by segment. Their Timberlands segment had a strong quarter. Net sales to unaffiliated customers increased by $29 million, primarily driven by more log sales and higher prices for stumpage and pay-as-you-cut timber. This helped their operating income in Timberlands grow nicely. The real estate and energy and natural resources segment also saw an increase in net sales by $14 million. Thanks to higher prices per acre for real estate sales and more income from easements and royalties. However, their wood products segment showed some weakness. Net sales decreased by $7 million. This was especially noticeable in oriented strand board and engineered solid section products where sales realizations dropped. Their cost of sales in wood products actually increased by $86 million, which understandably impacted their operating income negatively. Looking at their log sales, specifically third-party log sales increased by 328,000 tons in the quarter. In the West region, log sales volume jumped significantly by 150,000 tons. This indicates a strong demand in some of their key markets. In the wood products segment, things are a bit mixed. While structural lumber saw a solid increase in sales by $58 million driven by higher volumes, other products like oriented strand board and engineered I-joist saw sales decrease. This is mainly due to lower prices for these products. Their production volumes for structural lumber and oriented strand board also went up, which is a good sign that they are ramping up to meet demand. Now for the unallocated items, these are costs that can't be tied to a specific segment. For the quarter, the net charge to earnings here actually decreased by $33 million. A big chunk of that comes from an insurance recovery and less general administrative expenses. Let us look at adjusted EBITDA, a measure that helps us see the operational performance before interest, taxes, and special items. For the Timberlands segment, adjusted EBITDA grew by $26 million. Real estate and NR also saw growth. However, the wood product segment's adjusted EBITDA dropped significantly by $83 million. This confirms the challenges in that part of the business. Overall adjusted EBITDA decreased by $19 million for the quarter, but this is largely due to timing and special items. Then there is adjusted funds available for distribution, or adjusted FAD. This is a measure of cash generated that is available for things like dividends and share repurchases. For the year-to-date period, it was $421 million, down from $498 million in the prior year. This decrease is mainly due to higher capital expenditures, specifically for their new engineered wood products facility in Monticello, Arkansas. Speaking of cash, Weyerhaeuser ended September 2025 with $401 million in cash and cash equivalents. They also have a very healthy $1.75 billion line of credit available. This suggests they have plenty of financial flexibility and liquidity to manage their operations and future investments. When we strip out those special items like the lumber mill sale gain and insurance recoveries, net earnings per diluted share before special items for the quarter was 6 cents compared to 5 cents last year. For the year to date, it is 29 cents down from 42 cents. This shows that the core business performance, excluding one-off events, has seen a dip year over year. The MD&A section gives us more color on the economic conditions affecting their business. They are seeing lower demand in the housing and repair and remodeling markets due to higher interest rates and inflation. This is reflected in the weaker pricing for their wood products. Prices for framing lumber and oriented strand board are near multi-decade lows on an inflation-adjusted basis. This is a clear warning sign about the profitability of their wood product segment. They mention a 10% tariff on us imports of softwood lumber going into effect October 2025, which could further impact the market. Currency exchange rates are also playing a role, particularly with their export businesses in Japan and China. Things like housing starts in Japan and log import suspensions from China add to the complexity. Importantly, Weyerhaeuser states they are in compliance with all their debt covenants. This is crucial for maintaining financial stability and access to credit. They also completed a $1 billion share repurchase program in the second quarter of 2025 and announced a new $1 billion program. They repurchased about 980,000 shares in the third quarter. This shows a commitment to returning value to shareholders, which is a common strategy for mature companies in steady industries. Okay, so what is my take on all of this? Weyerhaeuser really seems to be navigating a challenging market environment, particularly in its wood product segment. The drop in prices for key materials like lumber and OSB is a concern for profitability, even though they are trying to offset that with higher volumes in some areas. However, their Timberlands segment is performing strongly, and their real estate and energy and natural resources business also saw good growth. The company's financial health remains solid with good liquidity and no debt covenant issues. They are also actively managing their capital structure through debt issuances and share repurchases. The big question will be how long these difficult market conditions in wood products persist and how effectively they can manage costs and pricing. The increase in timberland acquisitions also shows a strategic focus on their core resource, which is a smart long-term play. So while the overall profit may have dipped year over year, the underlying strength in their timberlands and resource businesses, coupled with disciplined capital management, paints a picture of a resilient company, but one that is definitely feeling the pinch of the current economic climate. Alright, that is our breakdown of Weyerhaeuser Company's latest filing. What do you think about these numbers and what they signal for the company's future? Let me know your thoughts in the comments. If you found this analysis valuable, hit that like button. It really helps us out, and subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description for exclusive content and discussions. Thanks for watching, and we'll see you in the next one.